My name is Nick Seidell with Silverton Mortgage. Please forgive me if there's some background noise. I'm doing the work from home thing as well as many of you. Want to give you a quick update on the mortgage industry. The Overbeck team's been gracious enough to ask me to speak for just a moment. So I want to be brief and respectful of your time, so I'm going to try to make this quick. So over the past 3 months, we've seen crazy change economically, social unrest, etc. It's been a tough time for many of you, and my hearts go out to you. With that said, this industry, in terms of what you could gain with the refinance, or if you're looking to purchase a new home, the crazy interest rates you could get are outstanding. With the impact on the stocks market, and with trying to prop up the economy with the Fed buying unprecedented amounts of mortgage-backed securities, what has happened is the yields on those securities have risen because of the demand that the Fed has artificially been creating some, and then big money hedge funds moving into mortgage-backed securities is crazy rates. Last week, I priced out FHA. First off, I want to make a disclaimer. Every situation is different. Loan amounts, credit score, debt to income ratio, but generally speaking, this is to give you a good idea. So I priced out FHA loans last week for someone, and I then looked at it again this morning at a $250,000 with a 661 credit score and 3.5% down. I was around 2.875 on a 30-year fixed. At 680, I was even lower than that. So crazy interest rates with little down. On a 30-year fixed, we're going to be somewhere between 3 and 3.5 for most people. Again, that's going to vary. I've priced 15 years in the past week as low as 2.625, not costing anything. On rate term refinances, which means you're trying to better your rate or better your term, for those of you that are not furloughed and could qualify on the debt to income ratio, can make a lot of sense. People that I've done loans for last year, at the 3.875 to 4% type range on a 30-year fixed, or dropping a whole interest point, and it's creating big monthly savings on interest, more principal going annually to the principal, and the 5-year impact economically, even staying on a 30-year and doing a rate term, can be tens of thousands of dollars. So definitely something worth looking at. I'd be happy to do it for you. Also, if you are looking to buy, now is a great time. There is a little less demand, but we've seen a big uptick in people buying and selling. Housing starts are a little bit lower, so it's a great time to sell, and it's a great time to buy because you can lock in with the lower interest rate, much more buying power. And a 1% difference is a huge impact financially. Anyway, hope that gave you a little bit of information. Have a great day. Thanks for listening.